Hey, what's going on, everybody? It's 9:48, Wednesday, July 7th, 2021. And in this video, we're going to go over some Bitcoin, some Ether, Tether, Binance, some institutional news, some casino coin, and China. This is just a brief overview of some of the stuff going on now. Excuse me, a couple of days off from my normal schedule just with the 4th and everything, so I'm trying to excuse me, get a couple videos out real quick so we can get caught up. I don't want to put out too many really long ones. Anyway, ransomware group Rebel strikes again, demands 70 million in Bitcoin from 200 U.S. firms. The Russian-based ransomware group is now demanding Bitcoin in exchange for a decryptor for the infected machines. I'm not going to read this whole thing, and all the links will be in the description. But over 1 million machines, excuse me, are said to be infected. They had targeted software supplier and used its network management package to spread the ransomware via the cloud. Some intense stuff. It's convenient. It's definitely part of the normal narrative right now. Let's listen to this guy.
Anthony, we take the dollar for granted. It's stable. We don't have to do constant evaluations, but the rest of the world is not like us. There's some country I just read recently. I guess it was an exaggeration. They just said, all right, we're taking a couple of zeros off our currency for what you own. And that happens. So if you're in a country like that, working your tail off to try to save some money, how can you possibly do it in local currency? And why wouldn't you have a smartphone with own a fraction of a Bitcoin to maintain your, what you work for, to actually, be able to use that and to have it stable?
Well, you and I are in agreement, Joe. You and I happen to be billionaires, but it happens to be in Zimbabwe, Joe, and
Exactly.
I think it's a $10 billion note that gets us across town. And so that is destructive. John Keynes said that would eventually happen. That's why at the Bretton Woods contract, the conference in 1944, he wanted a universal currency. This way we couldn't have that gamesmanship from policymakers and politicians. Bitcoin, if it scales, and we predict that it will be an effective store of value, and it'll be a place where people can hold their money. Remember, your time and your energy is going into making your money. If the Federal Reserve is printing a lot of it, they're effectively taking your time and energy away from you. Everybody that's in dollar-denominated assets did get silently taxed over the last year.
Right.
The U.S. government printed $469 billion in the first 5 months of 2021. And you can see it in prices, Joe, and
Yep.
It is worrisome. And I think things like Bitcoin will offer a solution long term for these
Excellent.
sorts of
All right.
issues.
You notice you start hearing a lot of this stuff over and over and over again. They're talking about the printing of money, the Federal Reserve, everybody's starting to look to crypto as a hedge against all the inflation. It's not just Bitcoin. They're going to say Bitcoin more than anything on here. I don't believe for 1 second that any of these people, well, some of them may believe that it's only Bitcoin, but not very many. Speaking of Bitcoin, I thought this made a good point in this clip.
Your crypto fund, though, is being whipsawed by what China is doing there on the crypto front in terms of Bitcoin mining. Do we need to see that threat abate in order for Bitcoin to emerge from what some people are already calling its next winter?
Oh, yeah, listen, Vic, it's been very volatile, but let's just go back and look at it 30,000 feet. It was roughly 8,000 last July. It's in the mid-30s today. If we didn't have that blow-off top, I think people would have been very happy with Bitcoin's trajectory. But I think the point that you're making is that, yes, China put a hurt on Bitcoin, but long-term, I think that's very positive. Because remember, everybody's worried about Bitcoin's effect on the environment. We just learned from the Bitcoin Mining Council that Bitcoin mining is now 56% renewable. With China out of the picture and all those coal-fired electric plants in China, Melissa, out of the picture, that ratio is going to continue to increase. And when you see things like what's going on in El Salvador and the continued expansion of Wall Street firms adopting Bitcoin and other funds like Ethereum, we just launched an Ethereum fund as an example, July 1st. I'm long-term positive on what China is doing. China getting out of the way, I think, will be a long-term positive for Bitcoin.
And to touch on that just a bit, I believe the Bitcoin group for all the sustainable and renewable energy stuff. I believe that was written by like 20% of the actual mining committee that participated in it. So I feel like I'm going to try to find that article in one of my next videos. You should look into it yourself, though. And if you notice, this is not the first time you hear him start talking about Ethereum right here on Squawk Box. Jim Cramer he's bullish on Ethereum all of a sudden. So if you, if you notice, you're going to start hearing about Ethereum more and more and more. And just to point out again, we still have it as XRP and no longer Ripple because finally people are paying attention. Speaking of Ether, Ether could overtake Bitcoin as a store of value, Goldman Sachs says. While bullish on Ether, Goldman denied crypto's superiority to gold when it came to taking the top spot among safe haven assets. I'm not going to read this whole thing. It'll be in the description. Signum becomes the first bank in the world to offer Ethereum 2.0 staking. I think this is awesome. They emphasize the robust DeFi ecosystem being built on Ethereum. It is the most developed blockchain network in existence, period. The programmability with Ethereum is ridiculously cool. Just the gas fees and all that stuff they got to figure that out. With Ethereum powering the exponential growth of decentralized finance applications, staking is a compelling choice for long-term Ethereum investors also seeking attractive yields. So this is a bank where you can do your staking with. You'll be it's just awesome. I think it's great. Most institutional investors expect to increase their crypto exposure by 2023. 4 out of 10 respondents said they plan to increase their crypto holdings dramatically. A survey found that 82% of institutional investors expect to increase their exposure to crypto and digital assets by 2023. The study by Nicola Digital Asset Management surveyed institutional investors and wealth managers from the U.S., UK, France, Germany, the UAE, and the Institutional Asset Manager reported, They did not say how many institutional investors were surveyed. Additionally, 4 out of 10 respondents said they would increase their holdings dramatically, with fewer than 1 in 10 saying they would reduce. Among reasons for increasing, 58% cited long-term capital growth prospects of crypto and digital assets. Over a third of respondents said it was because of either feeling more comfortable with the asset class or the improving regulatory environment. That's what I'm talking about. I'm here for it. Whatever. A recent example of the latter was a new law in Germany permitting special funds, the dominant institutional investment vehicle in the country, to hold up to 20% of their portfolios in crypto. Some estimates suggest as much as $415 billion could flow into the space should every fund allocate their maximum quota to crypto. And that is just from one source. There's a ton of these huge fund places like this that are just waiting for things to settle. Why Tether, the world's third biggest cryptocurrency, has gotten economists worried. It's the third biggest crypto in the world by market value, and the Federal Reserve is worried. Boston Fed President Eric Rosengren recently raised the alarm about Tether, calling the cryptocurrency a potential financial stability risk. Some investors believe a loss of confidence in Tether could be crypto's black swan, an unpredictable event that would severely impact the market. And when you think about it, I mean, they are the dominant stablecoin in the market for sure. They've had those lawsuits. They got some clarity. Now there's all the questions on, what is Tether actually backed by? Because it's not backed 1-to-1 by dollars. We now know that. It's a commercial paper amongst other things. And I feel like it's semi-undisclosed. I don't feel like they've been audited nearly to the extent that people would like them to have been. And they go in and talk about all this where the firm revealed only a fraction of its holdings, 2.9%, were in cash, while the vast majority was in commercial paper, a form of unsecured short-term debt. This places Tether in the top 10 biggest holders of commercial paper in the world, according to JP Morgan. Tether has been compared to traditional money market funds, but without any regulation. With more than $60 billion worth of tokens in circulation, Tether has more deposits than that of many U.S. banks. So, there's a lot of scrutiny going on with that right now. Something that's interesting that went along with this about a week ago. Stablecoin insurance firm Bridge Mutual to protect against possible Tether depegging. Years of regulatory uncertainty around Tether could be offset by newfound investor confidence if an emerging insurance protocol for USDT gains traction. it's talking about the similar stuff we were just reading, and it says now one company intends to provide discretionary coverage for investors against that scenario, and Tether itself is backing the play. That's just, I don't know. For me, I can't get into that. That sketches me out. Tether sketches me out. It's not financial advice. Do your own research. USDC, BUSD, two very viable alternatives. Caitlin Long posted this article from the Wall Street Journal, and her summary, something that caught her eye, was the mention of the U.S. Treasury Department having the authority to regulate payment networks and looping in FSOC to give the Fed explicit regulatory over stablecoins. So, you're seeing all this going with Tether, this insurance company's forming. Now, all of a sudden, Treasury and these people have explicit regulatory over stablecoins, apparently. And then listen to this.
What I think will probably end up happening is we're probably going to see a consolidation of cryptocurrencies. I think right now there's just too many. I think the space needs to consolidate a little bit more. And I think what you're going to probably end up having is the Fed will eventually come out with their own coin, and that'll probably be competing more with stable coins. So I think you're going to see there's going to be a lot of an adjustment as far as, well, how do I properly maintain my crypto exposures, considering you're going to have a digital euro in probably a couple of years. You're going to have the digital dollar probably in 4 years or so. What I think will probably end up...
It's coming, people. I'm telling you. U.S. financial regulator FinCEN hires its first ever chief digital currency advisor, Michelle Corver. And Michelle Corver, formerly of the Department of Justice. But that's not all. I went and looked at her LinkedIn. She was a special agent for the Secret Service out of the Miami field office for the Financial Crime Investigative Division. Looks like she was also in Germany briefly during that. She was a law clerk in the U.S. District Courts. She was assistant United States attorney. She was also the assistant United States attorney digital currency coordinator. And then at the DOJ, she was the digital currency counsel. Now she is the chief digital currency advisor. That is some decoration right there. Congratulations to her. I don't know what that'll mean for us necessarily, but regulation is what I do know is coming. Here's Binance. They've been going through all this stuff. I'm sure some of you are aware. They're just shutting down all this stuff. So they released a statement saying it's disappointing to learn that some partners are taking action to stop servicing our users based on what appears to be inaccurate understanding of events. The FCA notice that was addressed to Binance Markets Limited is a separate company they go in and talk about right here. I'm not going to read this whole thing, but they're basically saying we want our partners to reach out to us and talk to us instead of taking action. But then you see, Binance suspends payments for major European networks. SEPA is one of Europe's most significant payment system, which is active in 27 countries. So deposits and withdrawals, not going on, from what I understand. What says deposits will be returned within 7 days, while withdrawals will not be affected. So I'm not sure, but they're also facing a class action lawsuit after failing to handle Elon Musk's Bitcoin bombshell. It's not an isolated event. On May 19th, today, Chinese financial regulators announced that banks and financial firms are prohibited from providing services to cryptocurrency clients. Binance's trading systems are also suspended for several hours. Similar events took place on April 8th, May 5th, May 28th, and June 4th. And I have seen when there are major events, these exchanges do go down sometimes. I don't know if it's malicious necessarily or if it's just overload from the network, but that's not what this video is about. Binance said to be hiring UK version of Brian Brooks. The UK crypto exchange is looking for a UK-based ex-regulator or government official, according to people familiar with the plans. Brian Brooks was the former comptroller of currency for the Treasury, and here's a little snippet from him where they were just talking to him about some stuff. Check this out.
Can you explain, how are you owned by them, or what is the relationship?
Yeah, so we're not owned by them at all. Binance.com doesn't own a single share of Binance US. We share a common founder, and historically, Binance US licensed the name and some technology from Binance.com. The way to think about it really is that a couple of years ago, it was clear that the world was segmenting into two basic kinds of markets. You had most of the world, which was still learning about crypto, didn't have crypto licenses or requirements. And then you had an emerging part of the developed world that started putting crypto within a regulatory framework. We were founded precisely to be a regulatorily compliant licensed exchange. So
you hear that, people? They were founded with that intent. This is all part of the plan.
we've got 43 U.S. states that allow us to trade in their borders based on licenses and other legal compliance mechanisms that we have. We'll eventually have all 50 state licenses. And then, of course, there are other parts of the world served by a different company. But other than licensing the name and licensing the technology, we operate independently. We have a separate board of directors. We have a separate ownership. And, you might think about us as essentially a Binance branded exchange that's doing our own business here. They're the biggest in the world. We're the 8th biggest in the world. Different companies.
All right. So we got the brand here in the U.S. Now, Brian. When we talk about the U.S. regulation or lack of it, and I'm curious as to your thoughts as to why it's been so slow to see something a little bit more formative out of the SEC and the other regulators here, whether it's setting up guardrails, whether it's approving ETFs. There just doesn't seem to be any real momentum, at least not I can see publicly.
Well, Romain, that is a great comment. And I think, honestly, it says more about the U.S. regulatory system than it says about crypto, to be honest. Part of it is, in this country, we set up a lot of different regulators and gave them each their share of turf. So the issue is, and I know this having run one of these agencies, there's a little bit of inherent turf conflict between, the Fed and the OCC, or the SEC and the CFTC. Everybody's trying to grab a little bit of turf. And because of that, it's hard to get clarity. If you look at a country like the United Kingdom, where there's basically a single regulator for the entire financial system, that's the Financial Conduct Authority, it's a lot easier to get clarity. Over here, you've got competition among agencies, there's overlap in their jurisdiction, and so at some level, it's tough to deal with. But I will say, we're not as far behind as people might think. I mean, at the end of the last administration, all of the major regulators, myself included, got together through the president's working group on financial markets and started providing some clarity on certain crypto assets like stablecoins. And I think that's an example of how our regulatory system can adapt if all the regulators work together.
Brian Brooks, guys, makes you wonder if Binance US positioned themselves from the get-go in case something went on with Binance. It's interesting. It's totally speculation. Not even saying it's necessarily my opinion, just a thought at the end of the video. And last but not least, I just wanted to point out that right now, a million casino coin is just under $4,000. Not financial advice. And with that, I will see you guys next time. I'm going to drop a couple more early in the morning, probably try to get us all caught up. Take it easy.